And good afternoon, everyone. Thanks so much for joining our third in a series, In-House or Outsourcing, What Strategy Works Best for Your Business. My name is Jeffrey Tesch. I'm the CEO of RCN Capital. So happy to be with you today to moderate this panel with some really timely topics. I want to give a big thank you to Suzanne and Robert from REI Inc., the magazine that really supports investors across our nation. They've done a fantastic job in setting up these webinars. So happy to join you again this week. Well, today we've got a fantastic panel. And this topic, as I mentioned, is really timely as many businesses across the United States struggle to understand how they can contain costs or possibly set up new ways of doing business that they haven't considered before. So let's get right into it. I am going to have our first panelist talk a little bit about himself and his company. Rob Dewald, CEO of Precedent Management. How are you? Welcome aboard.
Thank you, Jeff. Appreciate it. We're doing well. We're down here in Miami. Everyone seems to be staying at home and doing what they're supposed to do to keep everyone safe. So, but Precedent is a HOA tax specialist. We specialize nationally in doing HOA risk mitigation, tax payments on a national basis. We've been doing it for about 10 years now, and glad to be here.
Thanks so much, Rob. And next up is Brian Flaherty, COO of Global Strategic Business Process Solution out of North Carolina. Good afternoon, Brian.
Good afternoon, Jeff. I'm glad to be here. Thanks again for the opportunity. Business Process Solutions is what we do. So we're a custom outfit. We have an onshore division called the Amerisource and the offshore division based out of the Philippines, which is Global Strategic. Servicing a variety of industries, but property management, property preservation, financial mortgage services, default attorneys, REO, things of that nature. So we've been busy, a lot of bobbing and weaving to meet our clients' needs, but definitely a timely subject and something we're well entrenched in.
Well, thanks so much, Brian. Also today we have Jay Harris with us, VP of Fair Collections and Outsourcing out of the Washington, D.C. area. Hello, Jay.
Hey, Jeff. Thanks for having us on today. FCO is one of the country's leading collections agencies focused on the rental housing space. We've done a few of these webinars over the last several weeks with our clients and prospects in single and multifamily, and have some good survey information about what's continuing on collections of charge-offs as well as credit reporting. So looking forward to a good discussion today and sharing FCO's perspective.
Appreciate that, Jay. And also today we have Brent Taggart, Managing Principal, Single Source Property Solutions. How are you today, Brent?
Very well, thank you. Pleasure to be here. Resolute Diligence Solutions manages and works in the single family rental, fix and flip, as well as other ABS type of assets. And we are a wholly owned subsidiary of Single Source Property Solutions. Pleasure to be here.
Thanks so much, Brent. Appreciate that. And finally, we have Mike Tedesco, CEO of Appraisal Nation out of Raleigh, North Carolina. Welcome aboard, Mike.
Thanks, Jeff. Appraisal Nation is a top 5 appraisal management company in the United States. We have near 3,000 lenders who work with Appraisal Nation, and our focus is in private lending with near 1,700 institutional private lenders using Appraisal Nation on any given month. Thanks.
Oh, thanks so much, Mike. And finally, once again, my name is Jeffrey Tesch. I'm CEO of RCN Capital. RCN Capital is a 10-year-old company focused on private lending to investors across the nation. We started back in 2010, focusing first in the Northeast. We're based out of Connecticut, just out of New York City, really focusing on folks who were buying, renovating, and selling homes. And as the years went by, we grew our company to really become an all services for the investor, whether you're buying, selling, whether you are buying, holding for rental income, or whether you're going to be needing financing for multifamily properties, as well as acquisition, as well as rehab components for those multifamily. We stand at about 100 employees outside of New York, really proud of what we've built and really just pleased to be here today. So let's get right into it. I've had any number of conversations with investors, different lenders, different service providers over the past few weeks. And the topic of outsourcing, or should I keep it in-house, is just a really, really timely topic for folks who are trying to manage the reality that we're in today. And, there's so many factors and items that you want to consider, whether to outsource it or keep it in-house. The pros and cons are just many. And Brent, I'd love to start with you. Your company has such a wide array of services, whether it be property preservation, title, valuation. You as a vendor can really take the burden off of some of our partners out there. How does a customer decide those pros and cons?
Thanks. Yeah, I think, one of the key things to look at is, does the group you're looking to outsource to have the functional specialization, or do you have that within your company? Do you have the people inside of your company that are able to do the functions that you're required or asking them to do? Is it going to be something that is a short-term volatile flow that you don't want to have to hire up and then have to reposition against? Do those people have the skills? Do you anticipate it's going to be something that's going to last for a long time? I think some of those are the key factors of, is this going to be a short-term project, or is it going to be something that you think is going to fit into your business model going forward? A lot of those factors go into it. What about insurance? Do I have to insure differently for this for my business purpose, and those types of things? Those are some of the key things that you should look at in terms of, should I outsource this or in-house? How are they going to do the job? So those are the main things that we speak with our clients about, the main things that we can focus on with them in terms of being able to help them with their needs.
Just a quick follow-up, Brian. I imagine many companies have grown over the years to just be an in-house model, and at some point they begin to think really from a capital standpoint, or whether it be an HR standpoint, they really start to think to themselves, maybe I would be better using an outsourced company to handle any of these tasks. How do you and your team, how do you decide or sort of cross that bridge with them to make them understand whether it makes sense economically or from an internal process standpoint?
Yeah, it's a great question. I mean, obviously, I think economics aside, it's always going to be a factor, right? And sometimes the economics are not necessarily the only factor, or you're willing to take a break even to reduce, risk or headache, right? So economics aside, which is the easy one for why you would outsource, save some money, there's other things too. And when I talk to clients about what they should outsource or what they should consider outsourcing, I ask them to, effectively what is core, or assess what is core to their business, determine what, their risk tolerances when it comes to certain things, and then also address the consistency. So that consistency being, like Brent just touched on, is there, do you have volume to, withstand this long term? I call it feeding the beast. Right now, call center work in origination is through the roof, but that's because of, the forbearance requests and what's going on with refinancing and, so on and so forth. But if you're a call center provider, are you going to scale up to, 150 more seats to meet the short-term demand? Probably, not a great idea. So there's a lot of things, but again, core, risk, and consistency to me are the three key factors to determining, do I or do I not look at this?
And when you're speaking with a small owner who's really tackling some of the challenges that maybe they haven't tackled in the past due to the crazy world that we're in today, whether it be from a Oh, just an increase in property management calls or forbearance, as you mentioned. You know, how do you set them up for success, whether it be short term or long term, to let them know that, you know, this may be the way to go for the new normal?
That's a tough one, right? There's no one size fits all answer, right? Ultimately, I think what we've seen with this and what will emerge from this is that everybody's idea of what they could potentially relinquish within their core competency or have done remotely, all preconceived notions to the contrary have been blown up, right? So even when it comes to risk assessment with a lot of our clients, their analysis of their risk maybe was overarching, and they could do some things from home. So there's no one size fits all. I mean, I think you have to seriously look at, like I said, the long-term play and couple that with your short-term needs. What you're going to find is if you didn't have a good BCP plan or you didn't have a good outsourced partner before, your emergence will be harder. But hopefully this should shed a light on the importance of a well-balanced approach in both regards.
Yeah, makes a lot of sense. Now, you know, Rob, I know your company is really focused on HOA management. You're based out of the Florida area. Maybe you could talk a little bit about how outsourcing various services and what you're seeing today has changed from just 6 weeks ago, and really kind of give our audience today an idea of how such a large player in HOA management is seeing the new reality of how we're dealing with our customer base today.
Right. So one of the issues that we see coming up is, you know, with the expected increase in delinquencies, we expect that a lot of this is going to be pushed onto the other homeowners. So we expect, and we see coming down the pipe is you know, taxes are probably going to be increased. Special assessments are going to be applied with the expectation of delinquencies. What was the rest of your question? I forgot.
Yeah, no problem. What I would love for the audience to understand is how your firm is handling what is happening today, because I imagine the phone is ringing off the hook as never before. And how are you communicating with folks as to the different challenges that the HOAs are going to experience?
So a lot of what we're actually getting is we're actually getting a positive response back from a lot of the attorneys and management companies, in that we're all working from home. So the fact that we're able to still communicate with them and get payments out, where I think that they're finding more difficult problems with some of the more individuals that they're dealing with. So I think, again, going back to, they're going to start seeing some more delinquencies and more needs for special assessments that are going to be coming up.
Yeah, that makes perfect sense. I could absolutely see that. And Mike, as one of the largest valuation players in the United States, my guess is that you have had a never-ending stream of calls from your lender providers as to what is happening, not only on the traditional side, meaning the GSE financing across the country, but certainly on the investor side, which is what a great deal of our customers are going to be on the call today regarding. Could you just give us a little background on how the landscape has changed and what you're seeing at Appraisal Nation?
Absolutely, Jeff. And you're right, it is a two-headed beast. We have the conventional retail side with the GSEs and wholesale lenders and the mortgage brokers, and that space right now is in turmoil, but it's still processing. And then we have the private lending side. And the private lending side, as you know, 85% of it took a quick pause. They said, we need to stop, we need to evaluate, see what's going on. Bond market, securitization, everything froze up, and they wanted to see what was going on. Now what we're seeing in that space is people have been able to reevaluate. They're making stricter guidelines. They're raising the LTV requirements or lowering the LTV requirements. They're raising the FICO score requirements. And we're seeing that take effect in shaping what's going to be really, I would suggest or think that would take over the next 3 to 6 months in that space before things actually get back to any sort of normalcy.
And how are the traditional lenders lending to owner occupants handling this crisis different than the private lenders who are strictly working with investors? How is each group handling this crisis differently?
Sure. So in the retail side, what we've noticed, they've also tightened their boxes as well, very similarly, but they've relied so much on their guidance from Fannie and Freddie. For example, with the valuation space, Fannie and Freddie issued guidance saying, with COVID-19, we don't want appraisers into the property, so we're going to give you these exceptions, which would be you can do an exterior under these circumstances, or you can do a desktop appraisal under these circumstances. And then they relied heavily on their providers, such as Appraisal Nation, to help with anything in the interim while they do that. For example, Appraisal Nation now has our new Home Link feature, which means if you do an exterior or a desktop product, we're going to be able to send a link to the borrower. They'll take photos, they'll answer interior questions. We'll provide that free of charge onto those exterior products. So in the retail side, they're relying a little more on their providers to do innovation like that, as well as getting the guidance from the GSE.
Yeah, that makes a lot of sense. I would think that technology, from a valuation standpoint, is now going to play a role like it's never played before. What have you done?
I agree, Jeff. I think America's always done an amazing job in terms of crisis. In times of crisis, we've always done an amazing job of coming up with new innovations and new ideas. And this is no exception. We invented this process to really help with this, but the applications for the future, for hybrids, for different uses that we could use it for, really are infinite for the future and what we can do with it. And I'm sure that there's many other companies across the gamut that are doing the same things right now. You were mentioning third parties. We use outsourcing. Typically, we utilize outsourcing for overnight shifts. So we're working 24 hours a day. We have an 8 a.m. to 8 p.m. shift, and then we're using outsourcing from 8 p.m. to 8 a.m. in the Philippines, getting everything ready for the morning for our staff. And then we have the same with QC, getting everything ready. And we're finding at this time right now, that's never been more crucial for us. We need to make sure that everyone has all their ducks in a row. So a lot of that innovation and where you can utilize benefits is, being used to the max right now.
Yeah, it makes a lot of sense. Thank you, Mike. And Jay, a couple of our panelists have mentioned the challenges already regarding forbearance and folks' inability to pay. As an expert in the multifamily housing collections business, I would love for you to drill down a little bit and explain to us how you're handling what I would guess is a very sensitive topic for your landlord customers out there and how they're handling things today. Would love a little background on that, Jay.
Sure, Jeff. Yeah, so FCO leads in the single family as well as the multifamily space. We work with 3 of the 6 largest single family operators as well as 8 of the 20 largest multifamily firms. And we were doing a survey last week when we had a webinar, similar webinar to this. And there are a couple of things that we found as a collections agency and talking to our clients. First of all, that people expect it'll get worse before it gets better in terms of the volume of requests for late fee waivers or skipping one or more payments, whether that's being written off altogether or deferred to the end of the lease. Right now, the survey we did, predominantly people thought that June would be the worst before things get better in terms of the volume of requests for relief and the share of payments that are late rent payments. We see right now most of what people we talk to were providing the relief that was being requested and received was just waiving late fees. That there are some requests to skip a month of rent, but we expect that will increase as these 22 million unemployment insurance filings in 4 weeks work their way through the system, and as we get more of those coming along. I mean, obviously rental is going to be impacted where you've got 12% of the American workforce already requesting unemployment insurance, and that number will only grow. So some areas will start to come back, but again, I think we're in the early innings of the delinquency side of this. So I think that some of the key parts is that obviously you got to document whatever relief you're giving. You got to make sure you've got standards in place if you're an operator to make sure that this isn't a freebie. I think the industry, single family and multifamily, have communicated the message pretty well that the COVID-19 isn't a free pass for paying the rent. And generally, some of the survey information shows that, while late payments are up, they're up by a manageable amount on the rental industry that's surveyed. So I think making sure you're documenting the hardship, making sure you're documenting the relief, and then working out these arrangements before placing a debt for collections. And if you're doing this in-house rather than ultimately outsourcing it to a firm like FCO, making sure that you've cleaned up any sort of disputes, any legal representation before it's placed with an agency to chase and collect that individual by the multi-channel approach we use with our onshore and offshore capabilities. So, the days of reaching folks by phone, having somebody in the office think they can handle this with the coming wave of delinquencies that this panel has talked about, I think are, it's highly optimistic to think that this can be done entirely in-house if that's how you've done it before. In our view, performance, litigation risk, reputation risk are all better if you're outsourcing this to somebody who's focused on the collection space. So that's a little bit about the trends. I think the dispute trends from their counsel are about the same kind of disputes we've heard before. And so the defense is the same, right? Good documentation, good property management software integration with your agency, and then quick response when there is a dispute to make sure we're rebutting these attempts to get out of a debt obligation.
Yeah, so that's a great point, Jay. And I think for a great number of our audience members today are either small to mid-sized investors. And I think some of the points you hit on are really going to sort of make folks think. And I would love, as a follow-up question, for you to sort of share with folks, some of the biggest mistakes that small investors make in transferring the debt in-house to an outsourced collection, and some of the steps that they could have taken to really make that collection go a lot easier. What are some points that you could give to our audience today?
Sure, I'd be happy to do that. They're basically four key ones, I'd say, and these haven't really changed, right? These are sort of blocking and tackling, execution of property management, and frankly, it's not just unique to small operators or medium-sized operators. We see this with some larger companies that may be picking up a set of properties where the prior operator hadn't documented it well. So it's really a difference between well-run and not run property management. But there are things like whether the agreement is enforceable. We'll get agreements that nobody kept a full copy of the lease, the guarantor didn't sign the agreement, or the version that had the notice of the late fee increase, the basis of the debt, it wasn't signed by the tenant, things like that. A second area is that debtor's going to say, hey, no, I didn't understand this obligation. There wasn't any notice that this was going to be a charge. I didn't know in a homeowner community that I'd be responsible for the landscaping charge, for example, move out. And what we find in some cases is that there really hasn't been a walkthrough of the unit, move out, and that there wasn't anything in writing that created the expectation for the single family renter that they're responsible for, whatever the charge is for that, to keep the property in compliance with the HOA standards. One of the things we found, we hear a lot about using video for the move-in and showing status, but we also find increasingly that our clients are sending along move-out videos where they've shown a walk of the property, a walk of the unit, and that's been a way to make clear to the tenant what they're going to be responsible for at move-out. where they're walking with a maintenance tech looking at dings in the wall and pointing out that this isn't just mere wear and tear, but this is really going to be something the tenant's responsible for. So move-out videos are increasingly popular as a way of documenting and making clear the tenants aware of their responsibilities. We see landlords differ in how aggressive they are in asking for damages. Some cases we've seen situations where it looks like there's really been an attempt to upgrade the flooring, upgrade the finishes under the guise of fixing damages and then charging the debtor the full amount. Or they're in the last year of a 5 or 7 year flooring on the property, and they're being charged the full replacement cost instead of a proration. Things like this, I mean, you could always ask for it, but those are likely to get a challenge from debtors counsel or even from a judge if this ends up in a garnishment matter. So final thing I'd say is simply that if you are doing any sort of credit reporting, giving the tenants you have the benefit of the payments they make on time, make sure that if you're giving them some accommodation, you've updated what you're furnishing to the credit bureaus. If they're late on a payment but you're permitting it, make sure that you've reflected that in credit reporting so that it's accurate with the FCRA. So those are a few areas. I mean, obviously this goes on for a while, but those are a couple highlights.
Really appreciate that, Jay. That's fantastic. Let's change gears for a minute here, and as we've entered this new reality, some of the ideas that we've gotten over the past few panels is talking about business continuity plans and disaster recovery, and how you think about that from your internal team as well as getting together with an outsourcing team, and how you sort of blend that all together. And Brian, I'd love to send this one your way, which is, disaster recovery, when you're in it is certainly not the time, but teaming up with an outsourced company in advance, how have you seen that work over the years, and what are some points you have for our audience today?
Yeah, definitely. I had an article published in the DS News, a few years back when we had the run of hurricanes, and we had, Florida-based clients whose offices were closed and power was out, and people couldn't get to their offices, didn't even have time to maybe put their plans into place for even having people be set up to work from home. And, having an outsourced provider, we were able to scale up and enhance our bandwidth. I think we had Jay or Brent talk about, the follow the sun, methodology. So we may have been in place as an outsourced provider for, overnight work, but because we were already in place, we were already in their systems, we were able to sort of expand our bandwidth and do that work. Unfortunately, we have short memories. And so when we're in the moment, we're focused on, business continuity planning and disaster recovery planning. But as soon as that moment passes, it sort of takes a back seat. And it's something that requires vigilance. It needs to be something that you look at all the time, that you test and plan for and add to your contingencies. So, our pandemic plan has been tested and proven worthy throughout this cause. We're at 100% continuity, and we are the back office for most of our clients. 75 plus clients nationwide. So. It definitely needs to be something that we focus on. If you weren't focused on it before, you're probably hurting more than most. But it doesn't mean that you should abandon it after this crisis goes by the wayside as well. So,
yeah, appreciate that.
Hey Jeff, it's Brent. To piggyback on what Brian said, I think one of the key things that gets asked of us as outsourcers is, do you have a BCP plan? Yeah. And then the follow-up question to that is, how often do you test that, and how rigorous are your tests? And without that, I don't believe that companies like ours would be able to go through what we just went through, and a test that, I haven't seen in my lifetime in this industry. We haven't had to go through too many pandemic tests, but be able to get through that and have people deployed at their homes, deployed, not working in the office, to be able to have people doing that and really have business as usual, is something that, you should ask of your outsourcers. Not only do you have a BCP plan, because it's easy to write one, but do you have a test and working results?
Excellent point, Brent. I mean, that's proof of concept, right? I mean, just because you have it on paper they should be able to document when they tested the generator last, when they've, tested their call tree last, when they put these, these different procedures and protocols into place, and they should be demonstrated. And, that should be part of your vetting process for anything.
I know that when Appraisal Nation went through its Morningstar ranking process, they came into that office, and not only did they pull the paperwork, they were looking for those tests. They said, okay, when was your generator tested? Show us your locking mechanism. Show us your security features. Your outsourcing department look at the testing for that. So they do a rigorous testing. And if you're going to have those capabilities, you need to make sure that they're all tested.
Mike, I think that's a great point, and the fact that you went through getting a Morningstar rating really goes a long way. Maybe as a vendor, right? You could share with the audience today, certainly as other vendors would look at the same thing, how you always refreshing your business continuity plan goes a long way in times like this. How do you and your executive team handle that?
Right. So not only are we constantly looking at our business continuity plan and our disaster recovery plans, we're even looking at those. And we had a pandemic plan in place, but to their point, and to our detriment, honestly, it was more of a on paper example in that case, because that was one of the situations that I will say the pandemic one, even when Morningstar came in, they saw that one, but it wasn't something that you could test. Now, fortunate for us, when we put it in place, it worked flawlessly. But it was a situation that worked very similar to our disaster recovery plan off of our hurricane scenarios, which we utilize here in North Carolina from time to time when we have whether ice storms or hurricanes. So it worked like one of those would, but typically those are a 1 to 2 day scenario, and this has been in place now for, gosh, what, over a month now, guys? It's been
week 5, yeah.
Yeah, I think we're full of week 5, definitely.
Yeah. So we've been 5 weeks at 100% remote capacity right now, and working flawlessly. But we had to make sure that our business continuity plans were constantly updated, especially as we evolve, right? As we said, hey, let's do a little more overnight prepping work in India. Let's do a little more customer service prepping work in the Philippines. And we had to include those pieces and make sure that they had their plans in place as well. Because obviously when you have a worldwide pandemic, everyone feels those impacts and they need to be working 100% remote as well, which they are.
Yeah, it's fantastic. And I think having those plans in place goes a long way. And even today, refreshing, trying to figure out what those remote challenges are and operating on the fly, without a doubt. So, Rob, I'd like to switch gears once again and talking about precedent management, how you're handling HOA account management for residential portfolios. We really want to have folks have an understanding today of, just trying to outsource items that will really help these owner operators or individual different vendors really take their businesses to the next level, and wondering how, at Precedent Management, the different tools that you provide can help attendees really achieve those goals.
Sure. So the number one way to develop the best relationship with an association is, well, first of all, is to make timely payments, right? And of course, any kind of violations that come up should be attended to rapidly and documented, and then reported back to the association. So that open communication going back and forth is critical. So that's one of the things that we're proud to say that we do that very well. So a robust accounting system, making sure that payments go out on time. If they have any issues with the residents, that they're addressed quickly, whether it be leaving a garbage can out or an unmowed lawn or inoperable car in the driveway, whatever the situation is. And it seems that most of those violations that single family residents get are usually fairly easy to address, but it's very quick. It's very important to address them quickly, document, and show that you're there to work with the association and make sure that all their concerns are being addressed. So that's part of our plan. Yeah.
Yeah, it makes a lot of sense. Given that the HOAs and municipalities will be likely be looking for additional sources of revenue, how do you think that will affect some of the code enforcement and HOA compliance that we're seeing today?
Definitely going to be tightening down on that. As delinquencies increase, they're going to be looking for that additional revenue, and it's so important to document those things on the, prior to the violation, as it's getting cured, bringing it to either the municipality or the association. We were talking about late fees and penalties earlier, and that is one of our key ways of negotiating and saving our clients money, is to address those things on a timely basis. So as they start tightening those rules down and start inflicting more and more costs onto the residences, it's important to address those quickly.
Yeah, it makes a lot of sense. And, I'm going to dovetail off of that over to Jay. And, certainly, listen, residential evictions are almost at a standstill. What's going to happen with residential collections? What's going to happen with tenant charge-offs? Like, as an expert in this field, what do you see is going to happen, Jay?
Yeah, so we touched a little bit on it earlier. I think you're right. We're in the early innings of this game. I think we've seen evictions, pretty much at a standstill, particularly for non-payment. I think there'll continue to be additional efforts to extend moratorium on evictions for non-payment. But at the same time, I think the collection space, with the exception of 3 or 4 states, is on rental collections is still what it was before, on contact outside of the court system. So texting, email, phone, we'll continue. And, garnishment through a legal court process is slowed as well. But I think, important is that we're continuing to see people placing collections, continuing to go after individuals who have the ability to pay. And, for those who want to keep their credit file clean, to take advantage of applying to their next property, if and when they're looking to move later this year, that motivation is there to round out the obligation that they have. I think one thing we expect to see is, we get another, let's say, 90 days into the program. It's a little bit of a call, but clearly we're going to see, more placements, more individuals trying to work their way out of these obligations. And depending on, what kind of rental unit availability there is, based on, the asset class, based on the demand in that location, we may see that it's pretty challenging for a debtor who's just skipped out, hasn't made any attempt to modify their obligation with their current landlord. It's going to be challenging for that individual because they're going to be credit reported differently as a delinquent versus somebody who has had problems but has reached some sort of accommodation with their current property management company. It's that the one who's reached the accommodation, that's not going to be a derogatory since it's credit reported with reflecting the COVID-19 status for the accommodation versus somebody who's just skipped out and left out. So I think, still we'll be able to differentiate, and the debtor still will have the motivation to pay or try to make good on their obligation or modify it another 60, 90 days down the road. So, maybe we'll do another one of these calls over the summer and see where things really stand. It's a little bit of crystal ball. But I do think, what's important now is that collections continue. And there are many, millions who still have the ability to pay and the motivation to pay right now and looking ahead.
Yeah, Jeff? That's great. That's interesting. Someone chiming in? Okay, so let me switch gears a little bit, but sort of on the same theme. And Mike, I'd like to throw it to you. You know, we've been talking quite a bit about tenants and the challenges they're facing, and their landlords are certainly chasing. But if you go up the food chain, the next trouble is going to be the bankers and lenders that have placed debt with these landlords, and going up the food chain. I would think that lenders are already beginning to think about how I'm going to handle any sort of forbearances and things like that with their customers that they can't be able to make those payments because their tenants haven't made the payments. And I'm wondering what you're seeing, and also if you could comment on, from a valuation perspective, whether you've started to see any requests for BPOs tick up or real-time information on property values.
So in terms of, I'll answer the second one first. In terms of what we're seeing already, everyone here knows, it's all about historical data. So I can't tell you if property values are declining or if they're increasing until we have historical data to prove that. Now, I can tell you that we are seeing an uptick from our servicers in getting a look into their properties, right? There are more BPOs being ordered. There are more exterior products being looked at right now. They're already taking a glance at that. Someone who may have been 30 days behind quickly fell 60 days behind, and they're worried that that could lead to an issue down the road, and they're already looking at those properties. So we are seeing an uptick in those properties. In terms of the lenders' fears, it's a huge problem, and the CARES Act did a lot of good things, but I think one of the issues that it had when it says, hey, we need no evidence and anyone can ask for a forbearance, just say you're having a hardship, that causes a lot of undue stress because there's potentially a lot of people who are still employed and are still receiving the exact same income, but they recognize through the CARES Act, they can say, oh, you know what, it is a little harder on me, and therefore they're able to get 3 payments, right, deferred or pushed away for 4 months or maybe even to the back of the loan. Well, that money, all of these mortgage payments is an influx of capital that many of these institutions utilize, and without that, it's definitely causing serious issues on these lending institutions, and they're looking at that very heavily right now. And as I mentioned previously, they're tightening their guidelines now for lending. It could lead for even tighter guidelines. I've already seen a few reputable lenders who are only lending on 800 FICO scores right now. So it's going to cause some issues for certain, Jeff.
Yeah, and I'd like to throw that same question over to Brent as a company that handles multifaceted in all things property management, as well as valuation, RCO, REO, and all things. What is your company seeing right now, Brent?
Yeah, we're certainly hearing from clients that there will be, if this continues much longer, there will be a need to do a mark-to-market, which will require some form of valuation. We're certainly seeing people that are starting to at least put the feelers out that will have to happen if this is going on. Single Source, our parent company, it works with originators and lenders, and so certainly the refinance market has gone bonkers, and they're certainly busy there. We do believe that certainly with homes, and we touched on this earlier, homes going through some sort of not paying HOA dues and municipalities that do not have the ability to get certain income, that they will start looking for violations, and our property preservation company certainly works in those. And we're hearing from some, fix and flip lenders that are stating that while we haven't had many delinquencies, we certainly expect some of these will rise. We will have some properties to sell, and it might be out of our purview or out of our scope of service internally to do this. So we may need some help in terms of doing inspections on properties and everything else. So the inquiries have started. We are processing those, and we certainly believe that those are going to go up depending on how long this continues.
Yeah, that's very interesting. Shout out to our audience. We have some questions coming in. Just a reminder, in the question tab on your screen. You can please put in any questions you like. We've already got some coming in. We're going to leave a few minutes at the end of today's call for audience participation. And, just to sort of give an overview of what we've been seeing at RCN is it's a lot of the same thing, as Brent just said, which is we're just starting to see things, right? At RCN, we're starting to have questions about forbearance. We're starting to have questions, but by and large, it seems like it's just too soon to tell. And, Brian, I would love to put the same question to you. Is it too soon to tell? What are you seeing? What are your customers saying to you with the new reality we're in?
It depends on the customer, right? We do a lot for default attorneys, and they're dead in the water right now. I mean, they literally can't do anything. They're all milestone billing, related, and so this moratorium has hit them very hard. They've furloughed a bunch of staff. We were a part of or an extension of their back office to some extent, and that work is dried up. On the property management side, we do, work order processing and lease application renewals and listings and call center related functions. And they're facing more of that than ever before, even though they're facing potentially lower revenues with people, taking advantage of programs where they cannot pay their rent or taking advantage of the fact that they cannot be evicted right now. So, it's tougher, and it puts an onus or highlights the importance of being able to run economically, right? So, more work than ever with less revenue. So kind of shines a light on what it is that we deliver for our clients. So we're seeing it across the board, and I'm actually seeing growth, right? So we do some title back office, and we've got clients who come with us, and they're busier than ever before. So, and we're ramping up for that. So it's kind of running the gamut for us. There's some advantage taking out there. I think if there's a takeaway from everything here, right, it's due diligence and communication. I was sitting on a panel with a property management group, NARPM, and we were discussing, reaching out and doing these types of surveys and having, proactive approach to where your tenants are at and asking them to provide proof of, potential hardships and what have you. But the reality is, depending on the demographic of your properties or your assets, some people might be making more money unemployed than they were making when they were employed. And with the relief check on top of it, that doesn't create a need to not pay your rent. So it really, it's a complicated situation right now. And what I would say is if you're not reviewing your plan for everything every day, you're probably making a mistake. It's critical.
Yeah. Hey, Jeff, this just came in while we're on this conversation. This is one of my lenders in the retail space. This is just happening right now. He said, Mike, I need some guidance. He goes, always trust your opinion. I'm just reading his email here. Just closed a deal in March. I sold it to Fannie. The first payment's due May 1st. Both borrowers are still employed as we just closed and did a verbal at closing. It was a 510 cash out, and we gave him $160,000 on the refi in cash, 2.5% on a 15-year. Just been advised his intent is to forbear on the loan for the next 6 months, and there's nothing we can do. He's using the cash for other things and won't use it to make payments, as he also still has employment. He goes, to me, this is the definition of a moral hazard. What do we do? I don't have an answer for him. I don't know if anyone has an answer for him. That's crazy, right?
Yeah, that really is crazy, and this is certainly a common recurrence that the GSE lenders across the country are facing, which is they get the VOE, and a lot of VOEs now, verbal employment verifications, are being done on day of closing now, and then sometime between the closing date and the first payment date, the customer asks for forbearance, and according to the GSE rules, they are not obligated to buy that loan, which is a huge problem because most lenders don't have anywhere near the capital to be able to balance sheet these loans. So it really is a huge problem. It's a huge problem. Rob, as an HOA real specialist, what measures are you taking now to monitor that the payments are being maintained and up to date and on time? Like, are you doing anything different than you were doing before? Kind of staying on the same theme of the new reality.
Yeah. So going back to, we were talking about, everyone transitioning from home. We were able to do that. We had a very good pandemic plan. We got everybody out within a week and 100% flow capable. So our payments have been going out. Part of making sure that everything gets applied properly is obviously properly notating the payment, making sure that the account and the address is recorded, balancing those books on a monthly to make sure that those are cleared, and if they're not, those checks are cleared, and if they're not cleared, going and contacting the association or the municipality and finding out why. So we've been able to adjust very quickly given the current circumstances and make sure that all those go out timely. I mean, even to the point where we're running out, a lot of these vendors require certified checks. So, we get these sent to the bank. I actually literally drive over to my controller's house, pick them up, get them exchanged and send them out. So we have a very good advantage in that we were able to move very quickly and make sure that everything is working 100%.
Yeah, that really is a new reality when you're having to drive to where the checks are showing up and then going to the bank. That is the new reality for a lot of us today. Absolutely.
You go through the drive-through because you can't talk to anybody.
There you go. And Jay, staying on that theme of ensuring payments and things in Latin, the smaller landlords out there today, are there good management documents that they can do lease modifications due to the COVID-19, or is there any general sort of database where folks can find this sort of thing, Jay?
Yeah, that's a good question, Jeff. So there are one good source is the National Apartment Association. Their lease is widely used, both in 1 to 4 family rentals as well as 5 and up. And they have some specific modification documents on the NAA headquarters, hq.org, for lease modification. And so that that helps. Obviously, if you're using your state-specific lease, there's some other one that the Utah Apartment Association has, for example. So I think there are some good sources. This doesn't have to be overly complicated. We're typically just talking about a page and a document to help with that. And I also know that Yardi is one firm that has put out some sort of lease modification tracking to get an idea of what sort of evidence of hardship, a layoff notice, a pay stub with fewer hours worked was retained for the purposes of showing the hardship. And so that software tool, fairly simple software tool, and I'm sure other software providers have or can create something that easily will help with the tracking, because I think, look, early innings mean now we may well be talking to some of the same tenants and said, yes, we did give you the opportunity to defer your payment till the end of the lease in Q3. Maybe we're back here again before we even get to Q3, and they're asking for another month. So having a good tracking rather than just handling this ad hoc is going to be important in your property management software system to make sure you know where people stand and what they've given already and what kind of representations they've made about having a job, having fewer hours, and so I think that's going to be important, to see the relationship. Look, this is bigger. Some of us went through 2007, 2008, which was predominantly about mortgage obligations where people were in over their heads and a quick change in valuations, people getting overextended. That was smaller compared to the scope, unemployment and so forth, the impact on credit scores that compared to what we're going through now. So it's a very dynamic situation, and one in which somebody who's not impacted now may be affected 6 months down the road. So it's just something to continue to manage against and continue to watch.
Yeah, certainly document. I think when it comes to that topic, it will pay you dividends down the road. I think that's really well said, Jay. So we're coming up on the top of the hour. I want to have just a time to get a couple of questions in here, and I'm going to throw this first question to you, Brian, which is, as a large vendor, are you seeing different solutions for some of your customers that they haven't previously seen in the past? My guess is the customer here is the panel is asking the panelist, how do you provide additional services that you may not have provided in the past with this new reality, Brian?
Yeah, it's a great question. I mean, obviously it requires what I usually typically call orientation, because for the most part, within our client base, we might handle, any number of 100 tasks for property management in totality, but maybe we only handle, 20% of those tasks for a client at present. So in some cases, very simple, we're just ratcheting up and taking on functions that we're already well versed at doing, and it's a means of acclimating with our clients. The other side of that coin is generally with our customers. We have customers that are, in varying degrees of size, from a mom and pop all the way up to Fortune 500, sized organizations. But in large part, we're the ones educating them on documentation, the need to document. Even if you weren't necessarily going to be looking at outsourcing your functions, you should know what your metrics are, your time per task is, and be incorporating some level of procedural documentation. And if any of that, once they're in place with us, we begin to do that for them anyway. So it's in some extent that is already in existence, even if it's functions we aren't yet taking on. So that way we can sort of turn on the faucet and handle it. My core function, I talked about it earlier, if you're going to outsource, look at what your core function is. Our core function is staffing and training. That's what we are, really. We're intellectual property protectors and a staffing agency. So we maintain a classroom and a bench. And those people are, in mortgage 101, finance 101, and property management 101 type training. And that makes them shovel ready and scalable. So, some of my talking points on disaster recovery or business continuity preparedness talk about, shovel readiness and mapping, and then having an action plan. That's the same for, those are the same tools you should integrate into your organization as a whole, regardless of whether or not you decide to go a bigger route of outsourcing versus insourcing.
Yeah, and a follow-up to that I think makes a lot of sense, and Mike, I'll throw this to you, is, there's an awful lot of lenders across the country who have chosen to do appraisal management themselves in-house, and I think in these times, more than ever, an AMC goes a long way to solving a lot of problems. How have you had those conversations with different lenders across the country, really strengthening their bench?
So a lot of us would agree here that you should do what you do well, which Appraisal Nation does, valuations, we do appraisals. That's our expertise, and we focus on that. That's our core competency. And lenders should do what they do well, right? They should focus on lending and put their resources into lending. And I think when they're trying to do it all with that one approach to everything, I think sometimes things can get missed. There's so much that goes into even just appraisal management. Every state has to be licensed. Those licensing laws are all different in all 50 states. You have to manage payment guidelines for every appraiser by every state. There's so many different regulations, and trying to manage those regulations while trying to lend is such a challenge, especially now more than ever, where the lending is so critical. And if you make a mistake, like the comment I read, and you wouldn't think that's a mistake, but when you have an issue and you do something, next thing you know, you're buying back what you thought was a good loan. You need to put every effort you have into that. You need to let, if you need third-party resources, you should go to the third-party experts. If you need appraisal management or you need appraisals, you should go to the appraisal experts. Those focuses should rest with those individuals, and you should focus on what you do well.
Yeah, that's really well put. So we have crossed the top of the hour. So we're going to pause there. A big thank you to our panel today, real experts in their fields. Rob, Brian, Jay, Brent, Mike, thank you so much for participating today. You really brought a lot of information to the nation, and I can't thank you enough. Also, a big thank you to Suzanne and Robert from REI Inc., national magazine handling all things investor related. Super, super, super magazine, and all the work you've put into getting this information out, I really appreciate. Next week's panel is going to be focusing on technology. So next Monday at 2 o'clock, we will be gathering again and focus on technology and how to implement that in your business process going forward. Once again, my name is Jeffrey Tesch from RCN Capital. Thank you and have a good day.